This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Taylor from Life Goal Investments. How you doing, brother?
Here we go. I'm excited to be here. Thanks for having me as always.
Oh, I look forward to our conversations. I have a blast. I learn a lot, and it's entertaining. So thank you for being here every week.
We push and pull on each other. It's good.
It's good. Yeah. We don't take anything too seriously, so it's all good. Well, the first thing I want to do is, it looks like the market today, which is Monday, the 22nd, when this is being recorded in the morning, it's 9 o'clock Pacific. The market's thrown up a little bit, kind of continuing through with its week Friday. I think the Dow is down 400, it's down a couple of percent. And what's going on? I think there's always been this tug and pull of the stock market versus bond market. I know where we've been, but I don't know. I don't know what happened. I don't know what happened Friday. I don't know what happened today. Can you explain it? Is there some event that I didn't know happened?
I think some kind of momentum started to dissipate a little bit on that bounce, which caused it to slow down. And then I think what's happening is the market's coming down to the reality of what the economy actually looks like at this point. And from all of our impressions, the economy looks like it's slowing and continuing to even grow at the pace that it's slowing. Yeah. Grow at the pace it's slowing. Didn't put that perfectly, but you get what I'm saying. The pace that's slowing seems to be exacerbating itself.
Yeah.
And it's just like, again, I mean, we've beaten this up a lot, but inflation is just so high and it's been persistent, much more persistent than what the Fed has said. So we're at 8.5% now. Like, bottom line is, to curb inflation, you have to slow the economy. There's no other way to look at it. That's how this game is played. You have to take demand off the table. Yeah. Demand off the table is people buying less tires from Goodyear. Mm-hmm. And what happens to Goodyear's earnings on the other end of that? They go down. Yeah. Like, this is, and the thing is, people understand that we're raising rates here in the U.S. And right. It looks like it'll be somewhere between 100 basis points from now to the end of the year if the market's right, and another potentially 50 right at the beginning of next year. And then it shows that they're going to cut on the other end. But what people aren't realizing is the fact that there are 39 central banks, major central banks around the world, 39 of them. 25 of them are systematically raising rates just like we are. 25 of them are trying to slow their economies. Global synchronized tightening is basically what we're seeing right now. Whereas the market did so well for the past 10 years because it was global synchronized loosening of policy. Flood the market.
Yeah. Yeah. And then obviously it went, total bonkers the last 2 years when it just kept your big finger on the print button. Print. Yeah. Everything went up. Yeah. The last, since the June bottom, I think a lot of that was momentum. Kind of the retail investors by the dip, let's be very clear, was rewarded again.
Yep.
That's going to hurt a lot of people.
Yep.
Retail coming in on that. And I just think there's one thing that you and I've talked about is after the last round of earnings cuts actually happened. Shocking.
Right. Market continues to go up. Earnings cuts, market goes up. What? Like, look at the commodities market. When we've talked at length about this.
Yeah.
The commodities market is continuing to puke on itself.
Yeah.
Copper's like the big one. So if you want to pick one commodity to look at, I think copper is definitely the one to look at because it goes into everything from electronics to vehicles to buildings, everything between. Lumber is, I think copper's down don't quote me on this, but 30-ish% over the last 3 months. Lumber's down 65% from March. 65% from March. Like, all too well, you're in the real estate game, but that is spooky. That's a tough one.
Yeah. It's, I don't know, man. It finally does feel like the stock market is realizing, you know what? The economy is not as strong as we think it is.
Have they not been listening to you for 6 months now?
Yeah, I guess. Yeah. What are they doing? Come on. What's up? The other thing, I don't know if you saw this morning, but it looks like the 10-year just popped over 3.
Yep. And so we've been talking about the inversion. So it's still very inverted.
Oh,
still very inverted at like 30, 31 basis points, something like that. But it has come in a little bit, which is weird. It was out at 42 basis points, which was the lowest it was, or I'm sorry, the widest, highest, right? Since 2000. So it's come in a little bit there, but it's still 31 basis points of inversion is not something you look at and say that's healthy.
No,
but I think what's happening there, go ahead.
I was going to say it's been inverted now for over a month.
Yeah. I think what's happening there is so not necessarily the change in inversion, because that's pretty de minimis, but the entire curve across the board is moving up. And I think what we're doing is importing a little bit of Europe's inflationary problems that they're seeing. So we saw our inflation come down a little bit. The UK just printed a 10.1, and Citi just
18.
projected.
18.
You saw that.
I did.
18.
18.
Yeah.
Man, we're
And
not quite hyperinflation, but that's a bad number. 18.
That's a really bad number. I mean, there's hyperinflation in the world right now. Argentina has had a 69% inflation rate year over year right now.
Yeah.
They just raised their rates 950 basis points, 9.5%. We've gotten to a total of 2.5% right now. They just did 9.5% in one clip. But what's going on right now in Europe is super interesting, because what you have now is this Russian squeeze is taking place in seemingly full force. So Russia and the Nord Stream 1 pipeline is where they get the vast majority of the natural gas, which Europe is incredibly dependent upon, especially in the winter. That's where they get the vast majority of their natural gas. It gets shut down for 10 days every summer for cleaning or whatever it is. So that was scheduled, but they just scheduled now a unbeknownst 3-day cleansing or whatever it is at the end of this month as well. And people are like, they're at 20% capacity right now, going from Russia to Europe, 20% of the Nord Stream 1 capacity. And it's like, they might go to zero. And that's what's causing all the inflation. So in Europe, they have certain caps as to what a utility company can charge the end consumer at the end of the day. The caps are moving like 40% or something crazy like that.
Wow.
And so the caps are going to go bang, and that's going to whack people over the head from an inflationary standpoint. That's the main thesis behind why Citi says it's going to be an 18% inflation rate in January of next year, when it's cold and they need it.
Yeah, I don't know how Europe's not in a recession today.
The Bank of I think it was the Bank of England that was saying it. It said this will be the longest. We're going into a recession. This will be the longest recession we've had since the Great Financial Crisis.
Yeah,
and Europe had a little nasty recession back in 2012 as well. That we didn't really get here.
Yeah.
Right. Yeah. Greece, that whole contagion of, are they going to be able to fulfill their debt obligations, et cetera. So they had a little bit more of a double dip there than we did here.
Yeah. And then the other thing that you and I've talked about, which we got to talk about again, is the dollar strength. I think you said it was for every 1% gain in the dollar, 0.5% comes off earnings. We saw dollar retreat. Now with the 10-year going up, I haven't checked, but I'm a betting man. I'm going to guess the dollar's getting stronger.
Yeah, it did. Good. Yeah, last week was a good week for the dollar. If you're a proponent of the dollar, was a good week for you. I think year to date, I saw it this morning. I'm pretty sure I'm quoting this correct. The dollar's up 13%. So 2 to 1, or half to 1, if you will. That's 6.5% earnings getting ripped off the top of the S&P 500. And again, we haven't seen it yet. So
yeah, do we still live in a world of good news is bad news? And what I mean by that is we got 2 numbers coming up. September 2nd, jobs number. The last jobs number was a blowout, 530 or whatever it was.
580, yeah.
Yeah. Do we still have that world where if we got another 500, let's say we got another 500, which I don't think the expectations of that, but let's just pretend.
Right.
Again, that's good news, but it's also bad news.
The economy's doing well, right?
The Fed has got to hammer us, and they may even go 100 basis point or something at that point if the economy.
Yeah, I think good news is bad news, especially in this. Like what you want it to do is be Goldilocks, be that 250,000 number where it's
probably
like,
more like 1.25.
Okay.
It's probably more like 1.25. Right?
Well, fair. It could be lower than that. Yeah, I think the expectation last time was
223.
No, 580 or something like that.
223, and it went up almost a double. It was almost a double. Yeah. So it's but again, and then. Again, I don't think anybody's calling this. If the number on the 2nd is negative, I think that's bad news, good news. It's like, then the Fed can come back and go, hey, those 75 whacks worked. We can chill out a little bit.
I think in short order that works. So in short order, the market rallies on that. In the reality of it, bad news is bad news. The economy is in a bad way. It's going to come back positively, reckoning it at some point, right? Yeah. And so weird. I should, usually there's only been one time, and again, I think these stats are pretty correct. So one time out of the last 8 through Fed rate hiking cycles that the market bottomed before the end of the actual rate hike cycle.
I believe that's true.
It's only one time. So we obviously are not there yet. We know we're not there. They're telling us they're going to continue to raise rates. And so with that, it pushes it out further and further. when the Fed stops, it's more likely that we bottom after the Fed stops than before, if history is any indicator. And history isn't any indicator, isn't a perfect indicator. What's Mark Twain say? History doesn't repeat itself, but it rhymes.
Yeah, exactly.
Yeah.
So I guess we'll round up episode 1. How do you feel about the 100 basis points between now and the end of the year, 50 basis points, call it Q1? And then could you possibly see him cutting next year? What is your personal opinion? I know it's what Street thinks, but what do you think?
Yeah, I agree. I agree. And we've been saying, and I've been wrong the whole time, that like they're going to have to stop raising rates more quickly than what they said. And that hasn't been the case, right? But I do think that they've shown the history that if they do slow the economy and it looks like it's going to be consistent slowing and the inflation is going to dissipate, that they will revert back to stimulate it on the other side. And if you could continue to get negative GDP reports, and I know that's not, part of their mandate specifically, but they got an eye on it for sure. They need to come in and revert course. And again, 2018, they raised to the end of the year in December. 2019, they cut in July.
They did.
So it's not like this would be something that's out of the norm for them.
But the only other wrinkle, obviously, as you know, this is inflation currently. And even if they raise another 150 basis points, inflation will still be above the Fed funds rate. That has never worked before.
Yep. And we saw during the 70s, like it took us 3 Fed presidents during the 70s to actually control inflation because people got off the brakes too quickly. Off the brakes,
stop.
Yep. And then Volcker came in and just
I got this.
I can handle this. And the result was bad, but it had to be done.
Yeah. It's going to be wild. But again, this is a lot of fun conversation. You put out a lot of amazing stuff on Instagram. What page should people be following?
Yeah, find us at Life Goal Investments. I appreciate you letting us advertise there at Life Goal Investments.
Oh, I follow it every day, so others should as well. Thanks, Taylor.
Thank you.